Today I'm going to be doing a backtesting session on CAD. Now this is the first video of a series of videos during which I'm just going to be doing some raw backtesting for you. Now obviously on YouTube there are massive amounts of information on how to use the best strategy or the best scalping strategy that's going to generate you tens of thousands of dollars every single month. Let's ignore all of this and let's focus on the actual real value that is just pure raw backtesting, me against the charts. I'm going to give you an insight into how I backtest and what it looks like to be a profitable trader who is testing his strategy. Now if you would like to see more of these kind of like raw backtesting videos, let me know in the comment section down below and make sure to leave a like. And without further ado, let's just dive in and give you guys some real value. Okay, so we're going to start here on the weekly time frame on CAD, and all I simply do on the weekly time frame is identify my market structure, where here we had a break of structure in towards the downside after previously also seeing a break of structure in towards the downside over here. So we've seen a double BOS confirming to me that the overall market structure is bearish, as we have a high, a lower low, a lower high, a lower low, and potentially now we formed a new lower high. So potentially a new downtrend could start forming a new lower low. So with that said, I now identify my overall swing high. So where we have our swing high is on top of this high over here, and over here we have our swing low. Now the markets have retraced into premium pricing, and premium pricing is everything above the 0.5 Fibonacci retracement level, and within the overall impulse which caused the overall break of structure that we have here to the left, we can then identify our liquidity highs. Now liquidity highs are nothing more, nothing less than little bumps in the road, where we have, for example, our first one over here, and as you can see at the time when we took out that bump in the road, we saw a strong drop in towards the downside, and then another bump in the road happened over here. Again, we take out that liquidity and a strong push in towards the downside, and now again a bump in the road, and let's say the final bump in the road gets taken out, and again we're seeing a push in towards the downside. Now I'm starting here in January of 2019, and we're just going to backtest 2019 here on CAD. So now that we're in premium pricing, we've taken out the, let's say, final liquidity high, we're in premium pricing. I'm expecting, let's say, the next impulsive phase to start, and new shorts in towards a new lower low potentially to start forming. So from the daily time frame, we can now work our way down to the daily time frame. So what we see here on the daily is that momentum has really started to come into the markets. What we saw at the top was a clear change of character, where we saw a break up, break down, break up, and then a strong breakdown. So for me, confirming that after taking liquidity, that the market is or was bearish. And now if I look to the left, what I can clearly identify are a lot of ascending lows where no liquidation actually took place. Because what I mean with no liquidation taking place is that you just have ascending lows. You have higher low, higher low, higher low. So at some point in time, it's very likely that the market is going to sweep all of those lows before then making, let's say, a higher retracement again, or an overall continuation of what is here, let's say, your overall daily swing trend, right? Because if we look at the daily trend, we have a swing low, we have a swing high, and we're looking for the next push up. That's based on the daily. Obviously we know on the weekly time frame that we're looking for shorts, so there's misalignment between the daily and the weekly. However, on the daily I'm also happy to look for shorts because there's no real liquidity to fuel the next real push in towards the highs, in my opinion. Now again, when looking for continuation trades, and what I mean with the continuation is that if this is your swing low, this is your swing high, and we're looking for longs on the daily, it needs to happen from a place of clear liquidity. But if I look here, I don't see any clear liquidity at all. I only see lows that want to be liquidated, hence why I'm happy to look for another short position in towards the downside. Now what I do next is I go to the 4 hour, and on the 4 hour time frame I identify that we are now bearish, because what happened here was we had a break of structure up, and here we've now seen a break of structure down. And the 4 hour time frame is always going to be my main trading time frame, and I'm always going to identify my setups on the 4 hour, because what we have here is a strong push down, and the 4 hour time frame is again the cleanest time frame to actually trade on. But what I want to say to you guys here is that indeed we have that strong push down that broke market structure. So again, what we can do within this overall, let's say, impulse down is the same that we did on the weekly, and that is identify liquidity. So what we have here is a bump in the road, liquidity high. Here we have a liquidity high, and pretty much after that it's just the liquidity highs here at the top of the overall range itself. This here is my overall swing in towards the downside, and as we can see, this is where we have the 0.5 fib. So preferably we would look for shorts from premium pricing, because for the rest we have bearish market structure, we have liquidity high number 1, 2, and 3, and now all we're simply waiting for is a retracement or reaccumulation to then look for the next short position in towards the downside. Because how the market ultimately moves is, okay, we see a strong impulse in towards the downside, then what happens is that we have a phase of reaccumulation, let's call it the orange zone, before then again seeing the next phase of impulse in towards the downside, towards whatever is going to be our higher time frame targets. Now, let's wait on the 4-hour time frame to see some reaccumulation, because ultimately what I'm now looking for is for us to at least take out this lower high here. Otherwise, I'm not really interested in any other setup than that. So let's see what happens here. So what we can see has started to form is somewhat of ascending market structure. We're starting to push in towards the highs. What has now happened here is that we've taken out the first overall liquidity high. Okay, so with the first liquidity high now being taken, I'm just quickly going to go to the daily, see if anything has changed. Not really, nothing really too interesting at all. Let's go back to the 4-hour time frame and let's see what happens here. For now, market structure is still bullish. This here is the overall, let's say, fractal low. This is the overall fractal high, and we expect the immediate market structure to continue up higher as long as that holds. So again, you see the market reacted to this area of demand, from there pushed up higher, but seems to be slowing down now, as what we can see is change of character up, another change of character up. But now what we've gotten here is a change of character in towards the downside. So this here is Friday, it's 3 a.m. So not obviously an ideal time to actually take trades on. But when I'm backtesting, I don't really look at the trading times. I just focus purely on, hey, do we have a valid setup or not? And then later I'll look at the actual trade data itself. What I, by the way, identify here is another bump in the road as well. Also, again, little buy up for sell down. And with bumps in the road, I'm referring to, again, within the overall impulse in towards the downside, bullish candlesticks, such as, for example, over here, over here, over here. On those bullish candlesticks, that's often above where stop losses will be positioned, and I want to see a valid reaction to that. So what we have here again is a valid reaction to this overall high that we have, and I'll be looking to see, hey, can we potentially now get that further downside? Because what has now happened is that we formed a supply zone here on the buy before the sell. Let me just give the zone a different color. On the buy before the sell, we've now formed an overall area of supply. Looking at the daily time frame, we've also seen a sizable retracement, not yet to the 0.5 fib, but we have seen a retracement in towards, let's say, the overall buy before the sell here. So I'm happy to potentially look for a first setup back in towards the downside, because this is the first valid reaction. And within this overall retracement that we're seeing, there are 3 positions from where I'm happy to look for a short. It's either from here, or the next position will be from this liquidity high over here, or when the high itself simply gets liquidated and then we see the change of character. So let's test. Let's just see simply, we're gathering data here on USD and how the market then reacts to this area of supply if we place our sell limit with our stop loss above the highs, and we're then targeting a new lower low for a 1 to 3 risk to reward. So what I'm going to do here is I'm going to place the overall order with the stop loss above the highs. We're going to place a sell limit. And let's see how this trade plays out. I'm going to remove the overall risk to reward tool, and we're going to press play. So we get tagged in straight away. A nice aggressive reaction here in towards the downside. A very aggressive reaction in towards the downside. So at this point in time, what I'm now expecting is that the market is going to continue its overall leg in towards the downside. Because again, remember what I explained about the impulsive, the pullback and the impulsive phase. We've had the impulsive phase in towards the downside. We had the pullback phase now, and now with liquidity being taken, and again, the change of character confirming market structure, I now expect us to be again within the overall impulsive phase. So within this impulsive phase, again, I draw in a Fibonacci retracement tool. I see, hey, we've now retraced to the 0.5 fib retracement level. And what I'm now looking for again is further shorts in towards the downside. Now, ideally, where would the shorts originate from? From a liquidation high, which is over here. Because again, all you're simply doing is within the overall impulse, identifying, hey, where do we have liquidity? What I often do also is I drop down to the 1 hour, and then on the 1 hour time frame, I see, okay, indeed, here at the top we have liquidity high, but also here we have, for example, a nice liquidity high. So if you're then trading the 1 hour at the time, this could, for example, be another position from where you want to be looking for those shorts if you get confirmation according to what you're going to be looking for. Now, preferably myself, I would be looking at the 15, and then the 15 I would be looking for again a change of character on that liquidity high, but I'm now mainly focusing on the 4 hour time frame. So let's see if we get another retracement in towards here from where we could look for another short towards the lows. So let's see what happens here. So what happens is nothing really much, just some equal highs there at the top. and then the market is ready to continue pushing in towards the downside. Now, again, guys, what we're currently seeing here is market structure playing out exactly as we wanted. We had the impulsive phase, we identified the pullback, and then we identified the next impulsive phase in towards the downside. So again, what I'm going to do is I'm going to clear my chart, and we're now going to focus on the next setup, which again is, and let's just quickly check what the weekly is doing. So the weekly is still very bearish, right? We're still seeing loads of downside momentum, nothing really clean here, what I can currently see, besides the fact that I expect us still to continue again pushing in towards the downside with the weekly impulsive phase starting after grabbing major liquidity here above the overall high. Now, what I again do is I go to the daily, and what I can see here on the daily is that we are still moving lower with the direct momentum to take out a lot of these ascending lows. If I look, hey, where do we potentially want to trade towards? If this is our bullish swing structure, I want to potentially trade towards this low over here, as this is kind of like the final low and the very first low of all of these ascending lows slash of this trendline liquidity that we have. So this for now is my overall target around 1.291. But obviously we'll see how the market reacts prior to that. Now, what I straight away identify already here on the daily is again some kind of like internal structure forming, right? We see a strong push down, pull back, strong push down. Now we're just looking for pull back for another strong push down. So what you pretty much have here on the daily, and this is on the 4 hour going to be a breaker structure, is breakdown, and then you have some internal liquidity here. So what would be ideal is for us to take out that internal liquidity and then again see another push down. What I'll do is again, I'll go to the 4 hour time frame, and let's see if we can identify another nice 4 hour setup. So again, 4 hour time frame is our main trading setup, or our main trading time frame, and what we have here is breaker structure up, breaker structure down, and then here we have another break of structure down. Now we've now had a double breaker structure, again confirming the bearish trend, and what I'll now do is identify swing high, and somewhere over here is going to be my swing low. I don't know when my swing low is going to be, but all I know is that at some point in time after the breaker structure line, right, so the breaker structure line is here, I expect a retracement to happen because the market moves like this, right? It doesn't move in a straight line down, it moves with impulses and pullbacks. Here we had an impulse, here we had a pullback. Here again, we've been having an impulse, and I'm waiting for that overall impulse to end and for the reaccumulation phase to start. So what we're now seeing, let's see. Okay, so we continue pushing down lower. We're waiting. We're still waiting. Okay, so it seems that we've now started to slow down, and that potentially that impulsive phase here has now ended. So that now means that we are trading potentially within the overall pullback phase. Where do we want to see the overall pullback phase start or move towards? We want the pullback phase to move towards the overall liquidity highs. Now, we have an overall liquidity high positioned over here, and we have another liquidity high positioned over here. So what we have here on the charts, and maybe you could consider this one as well, but it's not as significant as the two others that we have, because the longer, let's say the pullback is within that overall impulse, the bigger the liquidity, or the more significant that liquidity high will be. So what I'm looking for is pretty much just reaction to this high, and then from there, again, another downside push. That's what I'm now waiting for, with the higher probability short position obviously being from this high over here, as that is positioned above the 0.5 fib retracement level. So what I'll do now is I'll wait for the liquidity highs to get taken. Okay, so the first liquidity high gets taken, and what I'm now waiting for is ultimately the change of character to happen. So the change of character low is now positioned over here, right? And that broke this change of character high. And again, this is very simply said, a change of character is just a market structure shift. I want a market structure shift to happen, supply to form, and then look for a potential short. But that needs to happen. What is now nice is that we've retraced in towards 0.5 fib. So we'll monitor what happens from this moment onwards. Okay, nothing. So now we've come into kind of like the premium pricing and the final overall liquidity high. So what I'm now waiting for is and this is very, very nice, because what do we have here? We have a change of character high and we have a change of character low. So what I'm waiting for is now, again, the overall setup to play out, because what we have here is liquidity / bump in the road. We have bearish market structure. We have price trading above the 0.5 fib. So now what I'm happy to do is I'm happy to take a sell position on the overall fractal low break of this low. And this here is the sell that I'm happy to take, with my stop loss positioned above the overall 4 hour high, targeting a new lower low for at least a 1 to 2 risk to reward. So 1 to 2.33. Again, very happy with that overall risk to reward. Here I'll place a sell stop, and I'm happy to take a sell stop here because this is the final liquidity point. And I expect us to, when it breaks this, just rocket back in towards the downside. And then again, if it starts to break this high over here, then I'm happy to switch my buys and start looking for those potential longs again. So what we have here is, let's see, okay, momentum come into the market. This now means that this here is your area of supply. And if you were trading the lower time frame being, let's say, the 1 hour, the 15, that would now be the 1 hour / 15 minute area of supply from where we would be looking for a sell. Or what we could do, obviously, if you want more, a little bit more, let's say, certainty in your overall trading, then you could also just place a 4 hour sell limits here with your stop loss above the highs here. But personally, I like being a little bit more kind of like chilled and not as let's say how do you say it? I just like being, or like, I like trading like this a little bit more because it's a little bit more passive, a little bit more, let's say, easygoing. So here we're going to target a new lower low potentially. And let's see what this setup starts to do. What we can do is, for the sake of the example, again, also just place a sell limit on top of here with around a 44 pip stop loss. And again, I'll just target a 1 to 3 risk to reward. Again, I also like targeting 1 to 2.5 or 1 to 2. It's all based on the data that you collect, right, guys? You need to just backtest, and then eventually you'll see what works for a specific pair. So we have 1, 2.5, and a 1 to 2 over here. So let's see what happens. So we were chasing to that supply, and then perfect. You see, this is the kind of perfect setup that you want to be taking. Again, with a very, very, very beautiful risk to reward here. 1 to 2 risk to reward with a very valid overall entry set on the overall supply zone. Now, the market then continues in towards the downside to then eventually retrace and take out that high. So you can see the TP was actually placed very nicely. So as we can see here, 1 to 2 worked very well. 1 to 2.5, for example, would have hit your stop loss, or 1 to 3 would have hit your stop loss. Again, this is all part of the gathering of data. Until then, again, okay, so maybe after looking at an X amount of setups, it would have been better to place a stop loss here. You can also see that we then come back for this liquidity high that I mentioned a few minutes ago. So overall, we see another push in towards the downside. So we start to see here an internal trend form. So we have another breaker structure in towards the downside here. Now, this breaker structure here, what does it mean? It means that we could look for a potential setup again, because we now have what is an internal trend starting to form. And where could we then look for potential setup? We could look for potential setup when this internal high here gets taken, right? So I'm not going to move, by the way, the other setup. I'm just going to let it sit there. This is now the high, this is now the low, and if we now take this out, see the 4 hour change of character, I would be happy to look for another sell setup in towards the downside, because within the impulsive phase that we're now inside of, right? So we had the impulsive phase, pullback phase, impulsive phase again. Within this impulsive phase, we have impulsive phase here. So this here is the impulsive phase. We have then another impulsive phase now starting again, and now what we're waiting for is the next impulsive phase, right? So all you're simply trying to do is impulsive phase, pullback phase, impulsive phase, pullback phase, impulsive phase. We're looking to trade the impulsive phase within the impulsive phase, if that makes sense. So you have the bigger, the outer impulsive phase, and within that impulsive phase, you're looking to trade those other impulsive phases. So what happens here is, let's see, nothing. We just head down lower again, breaking market structure. Now, this is in a moment where this overall setup is here. So we have a $100,000 account. It's around 3% up. We're taking 2% risk. So these are kind of like the moments that we could put the stop loss to break even or manage the position, because now what you're seeing, guys, is a breaker structure in towards the downside, again happening over here. And that now means that this high should now be respected. So what happens is we have a very clear internal trend where we're forming high, lower low, lower high, lower low, lower high, lower low, and now we're expecting this lower high again to be respected and for the trend to continue pushing us down lower. I don't really see any real nice scaling opportunities. Again, you see overall downside push and then break even. Okay, so the market seems to be bottoming out, and let's delete it again and see what we can identify on the daily, because the daily seems to be slowing down quite a bit here now, moving within what is pretty much starting to be an overall area of consolidation. So let's go back to the 4 hour time frame. There was, by the way, quite a lot of liquidity starting to form here on the overall descending highs. So it could also just be a liquidity grab of all of those highs to then facilitate what is now maybe the next push back in towards the downside. So let's keep an eye on the change of characters, because the outer structure still remains intact, where this is the swing high, this is the swing low, and this here was the previous break of structure. So this is still the impulse down, and we're still waiting now for the next impulse down to start forming. But for that next impulse down to start forming, we need to see the market structure shift again, because you had a very nice internal trend here, but that internal trend now seems to be broken. Let me just get these lines in for you so it's nice and clear. So break structure down, break structure down. So this was the high with this high. That high is now being broken. So that now means that we would preferably want to see maybe something like this, this, and then this again start to form, where we can then look to capitalize on the new impulsive phase that then starts. But we'll have to see what happens on that side. So here I'll wait. Okay, so the market just chops up higher. So this is maybe then for the daily time frame a good thing, because remember, the daily time frame is still bullish, right? So maybe we need to shift our bias now, where we were still bullish right here on the daily with the bullish daily swing structure, break structure up, and the market is now retraced into where? Into the, let's say, discount zone, and has now shifted on the internal market structure from bearish now to bullish. Okay, so that now means that on the retracement, we could potentially look for a new long back in towards the highs, as this is now pretty much your daily area of demand. Quickly looking at the weekly, it also makes sense from a weekly perspective. Obviously, we're looking for the next impulsive phase to start in towards the downside on the weekly, but the weekly internal trend, and we cannot deny, has been bullish, right? So again, those shorts were nice back down into discount pricing, but the real shorts on USD CAD will start once this low here breaks. Once that low breaks, then here I'll go in massively, because that's the moment that both the daily swing structure and the weekly swing structure will then align with each other, or the weekly internal structure. So we'll go back to the daily, and I hope for you who are watching this, it's all very, very clear. Let me know in the comment section down below what you would like to see different, or if this is kind of like what you guys are looking for or / were expecting. So now what's happened here is we've had the breakdown, and here we have the break up again. So what we're looking for is the retracement, right? And then for the upside continuation again. So let's see, this is, let's say, just the overall sell before the buy down, and wherever inside of here we can look for potential new longs. This is the overall swing structure, but let's focus on the 4 hour, because the 4 hour structure is here. Indeed, the break structure up. No, so yeah. Okay, no. So it's clear to me. Let me just delete this zone real quick. This now is my swing low, and somewhere over here I expect there again to be a swing high. The overall cleaner impulse is obviously this here. The overall total impulse is this. But what I'm just going to do is keep it nice and simple for you guys. So what we have here is the overall impulse up, and within that overall impulse I'm looking for liquidity. So liquidity is, for example, over here, or liquidity is positioned over here. Now, these are the two main liquidity lows that I'll be focusing on within the overall impulse up. And you might be wondering, but Fab, why is this the overall impulse up? Because here you have impulse, pullback, impulse. The lowest point that broke the previous swing structure, that is going to be your overall swing low. So that's why this is not the swing low. This for me is just the liquidity low. So let's keep an eye on it, and let's see when it starts to top out. So I'm not going to look for any shorts. Even though we have a nice change of character here, this could obviously facilitate the overall pullback. I'm just looking here to the left. I don't really see any clean liquidity. Yes, we have a supply zone / imbalance over here, which could cause the overall pullback, but I'm a fan of trading pro trend. Well, there you have the pullback. Now, what's happening here is that we're seeing the overall pullback happen, right? And this is actually very, very nice, because if I look at the overall swing structure from this low in towards this high, the market is now retracing back down towards 0.5 fib and towards liquidity. So let's wait for liquidity to get grabbed, or if it gets grabbed, let's see. Yeah. Okay, so you see liquidity get grabbed together, and for the people who are watching this, this is Friday, March 1st of 2019. This means that this is the monthly open. And the monthly open, guys, is always a natural area of support and resistance. It's funny because this price action looks very, very similar to now, 2025 November. So check it out, October and November. It looks very similar to what we're seeing now. Whereas well, we reacted very heavily to the free monthly open and the monthly open. So we're now reacting to the monthly open. We're seeing a V-shaped reversal up higher. We built up liquidity here underneath these ascending lows. We took out this low over here, which is the first significant low and kind of like the first low of this, let's say, ascending trend line. And we're seeing a V-shaped reaction, meaning that bulls are coming into the markets. And the only other liquidity lows over here. So again, I'm happy to look for longs from here or from here. And this long would be in line with the daily internal trend and with the daily swing trend and with the weekly overall internal trend as well. Only just not in line with the weekly swing trend, but that's fine because we're trading on the 4 hour and then we don't need alignment on the weekly swing trend necessarily. So here I'm happy to look for a long. When am I happy to look for a long? On the 4 hour change of character. Where's the 4 hour change of character? That's this high over here of the bullish candle. So what I would do in this situation is I would be happy to now get in on a long position when we pretty much break the overall market structure. So what I would do in this situation is I would simply say, hey, I'm happy to place my stop loss underneath the overall low here for around 100 pips or 100 pips. And we target an overall higher high for a 1 to 2 risk to reward. Again, I'm a big fan of 1 to 2 risk to rewards nowadays. Back in the days when the market was slightly different, 2019, it was a little bit more impulsive. So you have different dates. It's nowadays, 2025. But let's see what the market does here on this overall high. And if it goes, and again, the plan is if it breaks this buy stop here, it should go. If it then retraces back down lower, then I expect it to take out these lows, and then I'll just place a buy limit on top of this low here with my stop loss here, and then we target the overall highs again. Okay, so let's see what happens here. Okay, so we got tagged in. And this is the danger again of a buy stop, and then you see the market reverse back down. Now this would have been very, very tough to see because it nearly takes us out again here, but that's why, I mean, the stop loss is there for a reason. Now what's happening here is we have demand, and we expect the demand chain now to hold. I'm not going to scale in, but overall, again, looking at the market here, let's keep it very simple. Impulsive phase. And now we expect, again, the new impulsive phase to start. So within the impulsive phase, the markets often move very erratic, and we can be slightly more aggressive with looking for the overall setups. So I expect the market to just continue and pushing in towards a new higher high. But yeah, we'll keep it nice and simple. We'll just stick to the original setup. But on the lower time frame, you could obviously look inside of this supply zone then and say, hey, do we have something on the 1 hour? Do we have something on the 15 minute to potentially scale in? But my trading style really loves just using the 4 hour time frame for simplicity purposes. So yeah, you can see maybe some lower time frame setups, but then again, pushes down lower. This is perfectly fine. Again, what's happening now, and usually CAD does this a lot from what I've seen, is it grabs some internal or some more internal liquidity. Here we have a trend line. Here we kind of have like a low. The only thing I don't like is that we have equal lows over here. That's never a real good thing. So I'm really need price to react to this first low here and then give us a nice reaction. But I mean, yeah, let's see. Doesn't look good so far. Very slow. We'll just hold and we'll see. So I'm not sure what this is. This is April. Not sure why it was so slow. But then look at that, guys. Okay. Okay, I need to clean up the chart again. So what happens here is the market then gives us another break of structure in towards the upside, meaning we've now seen another break up after this previous break up. So again, we are still very bullish, right? The market is still bullish. And what's now happened is we have a new impulsive phase, right? So this is now the new impulsive phase. Ultimately, again, this is the overall impulsive phase. But just to keep it more simple for you guys, this is what we'll note down. This is now my swing low. So my stop loss is still placed very nicely. Within the overall impulsive phase, we'll identify liquidity points. So here we have liquidity and here we have liquidity. So all I'm simply doing is I'm just waiting for this low to get taken or this low to get taken, and then I'll look for a new long back in towards the highs again. Okay, so we take out the first low. Now what we need is the change of character confirmation. What I like is that we have somewhat of a demand zone over here, by the way. So let's see if we get the 4 hour change of character. Yeah, so here you have the change of character. So this ultimately is now a valid setup. We have the 4 hour change of character inside the demand zone after taking out liquidity, and the market has retraced into the 0.5 fib exactly. So this is a very valid setup. So yeah, happy to take this. like this. So we set a sell limit, stop loss underneath the demand zone on the next liquidity, and again targeting a 1 to 2 risk to reward. We'll place the order, and we'll just place a market order. Let me get it like this, buy limits, and we'll see. So we place stop loss here, and if the stop loss gets taken, then we'll just look for another entry here on the overlow, and then again change of character, and we'll just go long again. So it seems that we have some luck for now. And exactly when I say it, the market starts consolidating. Okay, so tough time to hold. Very, very, very consolidative. This is still 2019 May. Yeah, not much to do. Then just hold. And hope it goes up. And it goes up. Okay, good. So we hit the TP on those. Wow, some very clean price action, if I'm honest. Again, here on USD CAD throughout those months. You needed to have a lot of patience because we can see that we've been moving very, very consolidative. We had a phase of consolidation here. We had a phase of big consolidation here. So difficult markets. Maybe at the time in the live markets, I would have looked at it a little bit differently. For example, using the range trading tool. I don't know if you guys are familiar with it, but who watch my videos more regularly, you'll know that I talk about it a lot, where we focus on the 25, so 0.25, and on the 0.75% Fibonacci retracement. And if you trade pro trend, here you had a nice liquidation event where you, for example, saw a bullish change of character, where also you could have gone long on the high break back in towards the highs. But regardless, whatever, you can see kind of like every single time before creating a new higher high, by the way. So before breaking market structure in towards the upside here, you can see that the market comes back down to raid the lowest low and then reversing towards the highs. Here again, same happens. We raid the lowest low, then get the change of character, and then we move up higher and we break the highest high. So yeah, some beautiful setups. These were the first, let's see, we're now currently in May. So that's the first 5 months of the year done with a 17/18% return. We took a total of how many positions? 1, 2, 3, 4, 5 positions, of which 4 were a winner and 1 break-even trade. So we can't complain. If we would have let that rest, then that would have been a stop loss hit, obviously. So let's just count that as a stop loss hit. So 4 winners, 1 stop loss hit, and overall nothing to complain in that regard, with a good 80% win rate then. Obviously with the higher time frame, you're going to have these phases where you're going to be right with the higher time frame trend, and your win rate is then also going to be, let's say, a little bit higher. Who knows, maybe in the next half year we'll take 3 losses in a row. Also perfectly possible. But this is, again, the beauty of the strategy. And if you have any questions, let me know in the comment section down below. I hope you guys enjoyed this video. And if you want to see more of these backtesting videos, let me know and I'll definitely create more of them. Thanks for watching. Appreciate your time and see you in the next one. Thanks.